We are showing today how to read about the fundamental analysis. Now, this is very important at this given point of time that you should know actually that what kind of security research and what are the processes through which we all have to go when we do security research. Now, there are two ways through which we approach the market. One is fundamental analysis and one is the technical analysis. Today, I will give you a very brief video, very small video about how to proceed in the fundamental analysis research. No. Now, see, first of all, why this is required for us to understand. You see, this slide will tell you actually what is happening in the market when investors or traders, when they approach a market, how do they behave. Just look at my cursor, you will see on the top line, there are three companies not known for good reasons. No, you know it better. The company like Suzlon, and then company like Noida Tollbridge, and then company like Jayaprakash. No, these three companies are not known for the very good reasons. And look at, if the companies are not good, what kind of public participation are there in the shareholdings. You will see in Suzlon nearly 71%. You will see in Noida Toll 64%. You will see in Jayaprakash more than 50%. That means if the company is compromised, which is appearing before you, suddenly you find the promoter has gone abysmally low in terms of their concentration in the shareholding, but retailers have gone very high. Public has gone very high. Why? No idea. Because they have absolutely no understanding about a good or bad company. Differentiating between the two is very difficult for them. Now look at one more example that will actually support your understanding, your conviction. Three good companies, old companies. Reliance, of course, known for the good reasons. Bosch, of course, known for very good reasons. And then TCS and Tata Consultancy, another good reason. You look at the promoter participation, around 50% in all the cases, in some cases 70% plus. But look at the public participation, it is abysmally low. In the case of Reliance, 11%, in the case of Bosch, only 8%, and in the case of TCS, it is only, I think, less than 5%. Means you can see in good companies, retailers, individuals, they are not into the business, they are not into the shareholding. But in bad companies, they are huge way. That means there's a fundamental error being done by people in identifying a good script and a bad script. People must know, people must learn before investing, and so fundamental analysis is very, very important. Now comes the question, how to understand this, how to read this. Now I will show you. See, this is basically a study. This is not something that in technical we do a lot of analysis in terms of looking at the graph, chart, pattern and lines. No, it is not like that. It is here we have to go through the numbers, and also you have to go through the information. So it's basically analysis. Now, how to proceed? See, this is about a statement of a study. I will give you a flow line. The flow line begins with a statement of a study of a statement of financial numbers, financial analysis. No, what are those published information of the financial nature of for a company? And then you will find balance sheet are there, then profit and loss accounts are there, and cash flow statements are there. Now you will see where I will get all these statements, all these numbers. There are so many websites nowadays which offers you free of cost data for last 10 consecutive years. So this would have been problem of long back when where you will get the numbers of balance sheet, PL account or cash flow statement. But nowadays you can go to Screener, you can go to trend line, you will find, you can go to money control, you go to Google Finance, you will find all these data and much more than that. And these 10 years data are available for all three financial statements: balance sheet, PL account, cash flow statement. Once you go through this, how to go through about this, I will tell you later on. But once you go through this, thereafter you must read the how to read the margins, because margins is basically efficiency testing. It translates the sales into profit. No, so you can say that how sales are getting translated into different level of profitability, and finally you have a PAT, that is a profit after tax. So this ratio has to be understood in respect of every company you are trying to study, you are trying to analyze about, and thereafter this comparison is required. No, After you doing this efficiency testing, you should learn about different ratios, and I will show you a couple of that. And I cannot tell you all this in this program. I will do some other recording for you for only ratio understanding. It is said for the book in the book of commerce and all that there are roughly around 50 plus ratios which is there in the market, which you can do read in the book of accounts. No, but it is not required for us all those things, and you require not more than 7 or 8 for the purpose of real understanding and conclusion about a good or compromised company. No, normally we identify them with these kind of name like liquidity ratio, profitability ratio, turnover ratio, leverage and coverage ratio put together. No, there are some more ratios people normally say, but it can be clubbed inside. So with this you can identify a club of ratios. So look at this. First, studying all the financial statements, then studying all the margins, then studying all the ratios, and then you come out with a concept of valuation. Means a company is good or a company is bad. No, now, when a company valuation is high, we recommend not to buy them. Just wait for a price to come down for you to make a good buy. Now, here comes two questions. Whether the company's valuation are to be expressed in terms of number, it will be called absolute valuation. How it is to be expressed in terms of some ratios, some multiple, then this will be called relative valuation. A very big chapter I will tell, but very, very important for you to understand. And after doing this, we again reconfirm our study, and the process for that, there are two processes for that. One is called time series analysis, one is called peer comparison. So you can make out that this is the actually flow line of a study, and thereafter you have to learn how to write your research report. No, that makes your entire fundamental analysis, how to learn and what is the process and modus operandi. A little more on this, I will not go much deep into this, but a little more on this. If you go ahead, you will find the ratios which I just now spoke to you can be depicted like this. No, you have a different kind of margins, you have a leverage coverage ratio, you have a turnover ratio, profitability ratio, liquidity ratio, valuation ratio. So all these are within that you will find one or two, three components which are extremely important for you to understand this. No, so let us have a very small look of three statements: balance sheet and PL account and cash flow statement. You may say, whenever I see newspaper, I find a full page of balance sheet and PL account very difficult to go through. I'm not a student of accounts. How should I go? Absolutely not required for you. See, for you to go through a fundamental, for you to complete fundamental analysis, you don't require to be a accountant. Accounting and accounting principles and processes could be very lengthy because they have to actually do transactions wise recording and tabulating of data. We are not into accounting, we are into analyzing the published informations. So we need not to worry. So your balance sheet, which in fact you will find on almost all kind of websites, are very simple. You will find in balance sheet a liability portion and asset portion. In liability you will find little important about equity and the reserve and the borrowings basically, and the assets that you will find normally fixed asset, current assets, as sometimes even receivables and inventories are to be little more important for you. So this 5-6 information of the balance sheet is good enough for you to come to a conclusion actually what you intend to see into that. And proceeding from there into PL account, again not much is required for you to understand except that 4 stages of your movement of sales to profit. You have a gross profit, you have a operating profit, and then you have a EBITDA, earning before interest and tax, very important, and then you have PAT, which is of course the reality that we all are working for. No, EBITDA is important in industry normally because if you watch a commentary on television, you will find they often say this number, EBITDA number is doing and doing fine and all. So EBITDA number you must see for every company. So EBITDA and PAT are the two levels where actually not lot of discussion happens. But for I will tell you that you must look at operating profit also. You may ignore for time being gross profit, that could be a way out, but operating profit are equally important because actually tells you how much translation of profitability is happening from the core business. No, I will let you know about all these concepts in my next video, where you will find how the core business and non-core business and their profitability are recorded and tabulated. Fine. So these three stages are very important. And to join this PL account and balance sheet, we have a cash flow statement where three activities from operating, investments and financing activities are recorded. The best part is that you have no you need not to know about how to design a balance sheet and how to write a PL account. You are It's not your duty. It's a duty of an accountant. He will do that. Auditor will look at the authenticity of what he has recorded. Once he vets it, once he signs it, and then it is the published information. Our job is to prejudge. Our job is to analyze. Our job is to make draw conviction, to make draw some conclusion about the relevance and the importance of these numbers. No, so financial analysis is all about your ability to judge what best you can do with the numbers, with the published information. Going ahead, you will always find some directors' reports are always seen, auditors' reports are always seen, news confirmations from media and all is seen, just to identify the numbers are in line with what all are being published, discussed in the market. That gives you a lot of confirmatory test, you can say. Even the reports and the information published at the exchanges are equally important. Even the information published by the credit rating agency are equally. All these are available on the same sites, which I will be showing you in my next program. So this is your basic flow line for you to actually understand what kind of fundamental analysis, how you will proceed, and how you can record your understanding about the fundamental analysis. Okay, good. Thank you.